Hello, everyone. Very good evening for everyone here. So thank you for joining our webinar section today. Hope every one of you are doing well. Yeah, my name is Brian from Phillip Capital Marketing, and I will be the MC for today. So during the webinar, if you have any questions, do type them into the question box, and we will address the question during the Q&A session lah. So the Q&A session will be at the end of the webinar. So of course, for today, we will have a very experienced speakers for the topic today. But before that, do allow me to introduce about our company first lah. Yep. So as usual, I need to emphasize on our disclaimer lah. So where this presentation has not been reviewed by SC, which is Securities Commission Malaysia, and is provided you solely for general information only, and does not constitute any recommendations lah. So we do not liable for any losses arising based on this information. So investment are subjective. So it's subject to your investment rates. So therefore, you should ask for your what you call that, qualified advisor before you making any investment decision. Okay, Phillip Capital is a subsidiary of Phillip Capital Holdings Sdn Bhd. Is incorporated in 7th of October 1995, which is a very long time already in Malaysia. Our headquarters in Kuala Lumpur, and we have 11 branches along across Malaysia, such as Kota Damansara branch, Melaka, Penang, Alor, Johor, Kluang, Kuantan. Of course, we do also have some East Malaysia branches, which is Kuching, Cebu, and also Kota Kinabalu, KK. I would like to take this opportunity to extend our gratitude behalf on my company, Phillip Capital, to all of our clients. No matter you are clients or not our clients, without every one of you, we are unable to achieve the awards. Especially in 2022, we achieved 2 awards from Bursa Malaysia, which is the best retail and also the best overall derivative trading participant for the year 2022. Our mother company, Phillip Capital, has office and branches over 14 or 15 countries such as France, Turkey, Dubai, India, Thailand, Indonesia, China, Japan, Australia, Vietnam, Cambodia, of course, United States, United Kingdom, Malaysia, and also Singapore. For futures, we cover not only product in Malaysia, we all cover from different exchange such as SGX exchange, CME exchange, which is included CBOT, NYMEX, and also COMEX. With our strength of global coverage, our clients are able to trade both local and also foreign product under the same platform. So Phillip Capital is one of your one-stop solution for your trading. Why we say so? Because that we do offer different kind of products such as like futures, stocks, equities, or contract for difference. Like for futures, we do offers index futures, agriculture futures, metal futures, energy futures, and also interest rate futures. Not only that, for equities, we do have Bursa Malaysia shares, US shares, Hong Kong shares, Singapore shares, and also Australia shares. Lastly, the CFD, which is contract for difference. We do have stocks CFD, which is Bursa Share CFD, which included top 100 of Bursa Malaysia stocks, and also NYSE and Nasdaq CFD shares. Not only this share CFD, we also have the index CFD for US as well. We are your broker of choice because we are one of the winning brokers. We provided 24 hours broking service and support, advisory service, latest market news to all our clients or non-clients, wide array of products, and also free account online. An online account openings. No matter you are clients or non-clients, we do offer free one-to-one coaching section, free seminar and webinars, and also free one-to-one coaching and free account openings. For free one-to-one coaching section, the key topics that we are focusing are introductions to futures trading or stocks trading, product knowledge, platform coaching, and also charting system. So you can scan the QR code here to look at our upcoming seminars and webinars. But no worries, because after this event, after this webinar section, we will send you an email. You also can look through by this. And here is the weekly market call. Basically, for a week, we do have 2 weekly market call. The first will be market view and updates. It will be every Mondays, 11:15 a.m. And the other one will be live counter technical analysis. It also will be in every Mondays, but this one is at night section now, which is 8 p.m. So if let's say you're interested to open an account with us, please do just scan this QR code and just open the account online, and this is totally free. For trading platform, we do have a few trading platform. If let's say you are trading in futures, for futures trading is Philip Nova, which is commonly used by our clients to access our, no matter it's global products or the local products. For desktop version, it's a web-based platform, but for the mobile version, you can trade using Philip Nova apps. So that will, which allows you to trade anywhere at any time lah. The platform for stock trading is Flip Trade. That one, Flip Trade is for local Bursa stocks, and for the foreign shares, there will be a Poems Global MY, which is commonly used by our clients to access Hong Kong, Singapore, and also US stocks. Lastly is our CFD trader platform. It's a very user-friendly interface, which providing a live charting, price alert function, live market price mirroring, exchange, and also advanced type of orders. So here comes our promotion. So in the coming, we have few promotion. So for the first one is the trade and earn with Philip. So this one is a year-long campaign. So within the campaign, if let's say you trade more, then you will earn more. Not just only earning the money of 1,800 ringgit per year, you are also allowed to earn some prizes from while you are trading lah. So the next one is discover Singapore stocks with Philip Capital. So by just trading in Singapore stocks, you are stand a chance to win a voucher of Touch and Go, and also stand a chance to win the iPad Pro from Philip Capital. The last one is trade US index CFD S2 USD. So this will be also a year-long campaign, which means you just trading the US CFD and you will be able to earn as low as the commissions rate. So before we start off to pass to our presenter today, so let me briefly introduce you about our presenter, David Lu. Mr. David Lu is a managing partner, which is an X-Module Trading Group PLT. So David Lu is the managing director of X-Module Trading Group PLT, a consultancy firm that specializes in bespoke trading strategies and coaching service for private and also corporate clients. David has over 25 years of experience in the listed derivative industry and has a helm leadership position in the futures broking division of major investment bank in Malaysia. David has the past president of Malaysian Futures Brokers Association from 2018 to 2019. So without further ado, let's pass to Mr. David to start your presentation. Hi, Mr. David, how are you?
Hello, and thank you, Brian, for that wonderful introduction. I'm so pleased to be with all of you. But firstly, just let me show my screen, right? Okay,
yeah,
show my screen.
Yeah, okay. Saw it.
Okay, you see that? All
yep.
Right.
Very clear. Okay, we'll pass the session to you, yeah?
Okay, and thank you and welcome everyone to this session. Tonight we are talking about this very interesting topic, crude oil's moment of truth. To bounce or not to bounce. Of course, those of you who has been following crude oil, he has been falling for quite some time now, and everybody's what do you call it, asking, is crude oil price going to come up again, right? So tonight we will explore this topic and see where crude oil's prices are going in the next couple of weeks, right? So we go down, scroll down, and uh, okay, this disclaimer, of course, Brian has covered, so I won't spend time here, right? This myself, okay. Besides being the managing partner of Exmodius, I'm currently also the MD for Top Infinity, which is a prop trading firm, and we trade all sorts of financial products like global commodities, currencies, equity indices, and financial derivatives. Okay, so the rest you know already, so I'll just move on. So what are we going to cover this evening? This evening we are going to cover and look at what are the key factors that are driving the volatility in crude oil markets the last couple of weeks, okay? Some of the fundamental drivers where you as a trader want to monitor and keep tab of what's happening in those what do you call that, fundamental drivers. Okay, so we look through at some of those crude oil supply and demand factors that you want to keep tab on, right? Then later we'll go in and see how we can position ourselves for the opportunities in the coming weeks. Okay, where's the trend of crude oil? Okay, is it going to consolidate? Okay, or has the bears finally finished their work and now it's back to the bulls? Okay, so we'll go in and look at the technical readings. Okay, look at what are the current phase of the market momentum. Okay, and we will use the Elliott wave analysis to look at its various phases on the market. We'll look at the longer term charts, when we also look at the daily charts, and then later we'll go into a live session and see what's happening tonight in the oil markets. Okay, of course tonight is Wednesday night, and Wednesday night at 10:30 later at night, it's the EIA data coming out, which shows what are the crude oil inventories. So tonight is going to be a very exciting night as well. After we finish our session, you will have a chance to look at the prices and see what happens at 10:30, right, where the data, the important weekly data on crude oil, US crude oil inventories come out. Right. So after looking at those various phases, then we'll get an idea of what is the potential price direction for crude oil over the coming weeks, right? And after knowing that, of course, you want to know how you can take advantage of or know how to profit from those trends. Okay, so we'll introduce you to some of the products, very exciting products from CME. Okay, CME, which of course co-hosting and organize this webinar, show you some of the products that can use, okay, to benefit from the trends that we're gonna explore. All right, so look at some of the tools and how to use those tools to apply the strategies that we're going to look at. All right, so this is what we're going to cover this evening. So before jumping into crude oil, let's talk about commodities as a whole. Okay, so as you know, the commodities also over the last 1 year, since March last year, actually, March 2022, it's fallen from its peak. You know, from the year of 2020 during the COVID, those 2 years COVID, you saw the commodity prices actually come up very, very, very strongly. And what you're seeing here on this chart, this is the S&P Goldman Sachs Commodity Index futures chart. Okay, this is a monthly chart which tracks a broad basket of commodities. It's slightly quite weighted to energy products. Okay, so it's very relevant to what we are talking about, the topic that we're talking about. Okay, so in looking at this chart, you can see right at the bottom in 2020, did this bottom, and then from all that 2 years is ramped up to March last year, where it hit the high. Okay, of course, throughout this journey, everyone and all the market commentators were talking about a super what do you call that, super commodity bull, right? So now, of course, all those bulls have quieted down a bit because it took quite a beating, right? It went up to 845 in this GSCI index, and it dropped right down to about 540, right? So quite a steep drop, okay, as you can see in the right side of this chart, okay? But mainly because at that time in March of 2022, there was this mounting anxiety about how how the global economy is going to do going out of COVID, okay, and then later China's what do you call that response to the COVID, the virus spread, the very tough measures, the COVID lockdown, the zero COVID policy, further dampened the sentiment, right? So in terms of the China demand for in the world, okay, we saw a huge shrink of that particular factor, okay. But what has happened in 2023 is China started to open up, okay, so the restrictions were dropped, okay, and now it's already fully reopening the borders since March. So we also saw, if you notice carefully here on the chart, the monthly chart has shown what we call a bullish reversal pattern, okay. So for the technical analysts, we saw this pattern, and then we saw it going, probably trying to break out of the high of this particular bar, and that probably could possibly be a possible change for fortune for commodities. Okay, so later we'll go in and charts and see how that pans out, right? So the question is it time for all commodities to come back? Okay, as the market attempts to find a bottom with this key bullish reversal pattern. So we move on and look at the oil. Okay, oil's fall from grace. Okay, very similarly in March of last year as well, oil created a peak at 130.5 US dollars per barrel, okay, and then dropped drastically to almost more than 50% to 64.36, right at the bottom that you can see here, which happened to be about a year after that as well, almost slightly above a year after that. Okay, but what is interesting to notice over here, right? If you pan your eyes back to the left, to the middle here, right? If you can see my cursor, right? It's come down to the very important support levels as well, okay? So this particular point at 64.36 basically coincides with those support price levels, okay, of 60 plus and 62, right? So the question is, are these 3 points, this bottom, enough to support the next launch of the bull market? Okay, so that's something that we will try to answer this evening as well, right? But over the last 2 weeks, okay, coming into April, we had a few catalysts which moved the markets higher, okay. So in the month of April, actually we saw prices jumped to a 5-month high, okay, because of a few factors. The first factor was in the start of April, okay, the OPEC Plus announced a very surprising to the markets, a cut of 1.16 million barrels production cut. So they're cutting their production from May onwards, okay, down 1.16 million barrels per day. So this was a very big surprise in the market, right? And we saw they announced it on Sunday, and we saw on the first hour of opening of the oil markets, we saw the crude oil WTI jump, okay, almost $6 in the first hour, right? This huge gap you saw here, right? So it was trading around the 75 plus levels, and we started then to trade above to the 81 50, 81 60 levels, right? And this was a big boost, right? After such a long time, after 5 months, this was one of the biggest boosts. It's like an injection of turbo fuel into the market, right? So in that sense, after that, the market tried to digest. Okay, so such a big news, it started to try to digest. So you saw the market started to trade sideways over the next 1 week, all right, until the 12th. Okay, so the 12th, we had another slew of data coming in, which is the March consumer price, the inflation numbers from coming of the US, right? And because the numbers came in milder, right, only 5% in the CPI, so you saw another jump. Okay, why the jump? Because players felt that, okay, with this very milder inflation, I would say, perhaps the Federal Reserve will slow down or stop completely the interest rate hikes, or perhaps even start reducing interest rates, right? So that particular day when the data came up, jumped another 2% up to the $83.5 per barrel price. Okay, so now it's kind of come off again. Today we actually had a sell down, which is not reflected in this chart. It came out to about 79.40, so quite a huge retracement as well, back to the consolidation range. Okay, so again, trying to digest all this, so many data coming in into the market, and the players are just reacting, right? So we will have a look later at which phase. Why do players act are so sensitive to all this data coming to the market. We'll see why this particular situation is one when we look at the Elliott wave analysis. Right, so this is what happens in the first 2 weeks of April. All right, so now let's go in and look at some of the key fundamental drivers in supply and demand of crude oil. All right, so tonight we're going to see the oil inventory numbers again, okay, but let's look back at what has happened in the last couple of weeks. Last week when the data came out, okay, basically inventories rose a little, okay, so there's about 500,000, almost like 600,000 barrels in the April 7th week, okay, but this was following periods of declines. Before that, 2 weeks before, the inventories drawn down, okay, inventories actually drawn down. That means inventories fell, okay, so some 3.7 million barrels in the previous week before the April 7th, right? So you can see over the graph here, okay, the graph when it goes below zero, that means inventories are drawn down. When it's above zero, it's the inventory is building up, right? So over the last couple of weeks, we saw actually there was this drawdown in terms of oil inventory. That means there is demand, okay? It's indicative of demand, so that the stocks are actually coming down, right? So tonight we'll see, okay, what are the numbers, and of course these numbers are basically have a short-term movement. It influences the short-term movements within the one or two days after the data come out. Okay, it gives that sentiment over the very short term. Tonight, I think the players are looking at 1 million draw. Right, so we have to see whether the numbers that actually come out surprises or not. Okay, so this will be tonight 10:30. Okay, but over the last 3 weeks, okay, we saw more drawdowns in inventory, which is indicative of the bullish what do you call that sentiment, right? That sort of suggests that there's a bullish underlying in terms of the demand. Right. So the other thing is we have to look at the supply side. So look at what the EIA sees about the US crude oil production. Okay. So in terms of in January 2023, which these are official numbers, okay, which already come out from EIA. Official numbers are a bit slower. Of course, we are saying now we are already in April. Okay. But then in terms of their outlook, okay, they see basically oil production continue to climb. Okay, this number is one of the highest since April 2020, right? You can see the chart over here. This is the production, and it's been on an incline, right? So it's steadily climbing up, and closing in actually pre-pandemic. You can see that the crude oil production it's above 12.5 million barrels a day, right? So it's inching up towards the pre-COVID or pre-pandemic levels. Okay, slowly rising to that. Okay, whether it can surpass or not is something that the EIA is always tracking, and they potentially probably see that happening as well. Right. So this is something that to look at, and basically you can see that there's a slow and progressive rise in production. All right. Okay, another thing that we look at is the US oil rig counts. Okay, in terms of what are the active rigs currently pumping oil. Okay, so in terms of looking at the numbers coming out on April the 7th week, okay, we saw that the oil rigs in the United States actually decreased from 592 to 590. Okay, and this number of active what do you call that oil rigs, okay, was the lowest since actually mid-June of last year. Okay, so although we see the production slightly going up, but basically the oil rigs have been struggling to stay above 627. Okay, in December last year, it peaked at 627, the number of active oil rigs pumping up oil. Okay, but now it's slowing down. Okay, it slowed down some almost 30 over oil rigs. Okay, so basically you could see also over the graph, it's tapering off in terms of the crude oil rigs. Okay, so this may suggest that in terms of the production growth or supply growth, growth is actually slowing down. Okay, so if demand is going to pick up strongly and the supply doesn't really kick in, then it will have a very bullish undertone for the WTI prices. Okay, the other thing is look at shale oil production. Okay, so shale oil production was one of the wonderful things that happened to US oil actually pre-COVID, right? Where the US actually became a net exporter of oil. Okay, but shale oil, of course, the industry suffered a lot going into the pandemic. Okay, a lot of these shale oil production companies lost money. So during the point where prices of the crude oil really dropped drastically. So a lot of shale production, because the cost of producing shale oil is quite expensive, what do you call that? A lot of that suffered. Okay, but with the rising or rise in the oil prices, okay, a lot of these shale oil producers are able to churn up profits. But in terms of actually the growth, okay, shall see later that it's not really growing very aggressively because they are not really putting in fact, they are quite nervous, to put up so much capex into shale oil production. Okay, so but the EIA sees that the shale oil production is still going to continue to rise, okay, by 68,000 barrels per day in April 2023 to 9.2 million barrels per day, right? So this is a breakdown of the various regions of oil production. Okay, just summarize. These are the breakdown of each of those what do you call that regions. Okay, and when it comes to this, then we want to have to look at this. DUCs. What are DUCs? Okay, DUCs are drilled but uncompleted wells. Okay, basically it shows you that what are the possible wells that can come up with production. Okay, they have drilled the wells, but it's not completed yet. So if you have more DUCs coming, that means there's a huge inventory of potential production. Okay, but in terms of looking at the numbers, okay, month to month, you could see that the numbers actually declined to 4773 in what do you call that, in February. Okay, actually increased. Okay, it actually increased, sorry about that. It actually increased. Okay, but the growth is not very aggressive because again, we say the high cost of production in the shale oil drillers. Okay, they are quite reluctant to aggressively invest in what do you call that, drilling more. Okay, so yeah, so sorry about that. There's actually a slight increase. Okay, I think the previous report was a reduction. Okay. Okay, so now we talk about this very important guy in the whole industry, oil industry, which is OPEC Plus. Okay, these are the oil producing countries, right? And the thing that they did in April was something really big, right? Big surprise cut, a very bullish catalyst for the market. Okay, that's what a lot of players initially thought. Okay, this 1.16 million barrels per day production cut starting from May. Okay, it basically gave out a few signals. Okay, the initial knee-jerk response is wow, this is very bullish. Okay, because there's going to be lack of this number of barrels of oil come to the market. Okay, but it also says maybe OPEC is giving out a signal or indirectly saying by cutting this is, because they're trying to stabilize the price of oil. Okay, perhaps their view of the demand is not so great. Okay, perhaps there's some pessimism over the demand outlook, and perhaps they feel that there is maybe an oversupply in the market. Okay, that may be the underlying reason why they cut production starting from May as well. Okay, so there are a bit of a debate of whether this is going to be a long-term, very bullish signal. Okay, of course, initially you saw that Monday opening $6 up on WTI. Okay, of course, everybody has to react to that very bullish production cut. Okay, but after that it started to go sideways a bit and didn't really push forward in terms of the prices, except for that one big leg up because of the CPI numbers. Okay, so now we're back to about that level where it came up from. We had something at 79 now, right? Okay, so we're going to see whether what OPEC does, but OPEC is now a very important player. You have to monitor what OPEC does because at one time when shale oil was big in the US, okay, OPEC actually went on a backseat. Okay, but now with shale oil production in the US not being the key player, OPEC now has come back, and everything that OPEC does is going to affect the oil market in a very big way. Okay, so watch what OPEC does on the monthly basis, especially on the beginning of the month when they have the meetings. Okay, in terms of the demand, okay, China is one of the biggest importers, if not the biggest importers of oil in the world. Okay, so anything that happens to China's economy, all right, we're going to have a very big impact on oil prices. So the resurgence of what do you call that of the demand, okay, post COVID-19, after they remove all the restrictions and after reopening all the borders in March, okay, this is going to create what do you call that a big boost into the oil in the global oil markets. Okay, because number one, now the Chinese can travel overseas, right? So their planes will be flying. Okay, there'll be demand for jet fuel. Okay, and this is going to push prices upwards. So in terms of the International Energy Agency (IEA), basically expects China to dominate the demand recovery by the end of 2023. So they're quite bullish on the China's what do you call that recovery, right? So they came out with a report, the oil market report, OMR on March 2023, saying that basically in terms of the global demand, it sees a surge of 3.2 million barrels per day, starting from quarter of 2023 to end of the quarter 4 in 2023, right? And taking an average growth for the year to 2 million barrels in terms of the demand, right? And it's going to reach a record 102 million barrels per day, right? So a very bullish outlook in terms of the IEA's oil market report, okay? And basically the biggest player in terms of this recovery in terms of the demand is China, right? So China, whatever is happening, the data coming of China is something that you want to keep a close tab on, right? Okay, the other thing in terms of the key drivers is, of course, how the outlook of the global economy is. All right. So last month we had this development. Okay, which kind of put a spanner on the optimism of the recovery. Okay, because the three U.S. banks and Credit Suisse in Europe. Okay, the failure of these banks revived the fear of a full-fledged financial crisis, right? So we had that in 28, the subprime crisis, and banks failing again is kind of again a deja vu, which nobody likes, okay, in terms of the markets, okay. So this has come up with you saw a very nervous reaction to these developments, okay. So in terms of that, also it created a big dilemma for the central banks and the policymakers in terms of the policies, okay? How to juggle the delicate balance between controlling inflation, okay? Because inflation, it was something that everybody's worried about, how to control the runaway inflation, okay? And then you have this crisis coming in, and if you continue to raise the interest rates, it's going to go into pressure banks again, right? So they have this very delicate what do you call that balance between raising rates aggressively or having to what do you call that reduce rates, and then you still have inflation on the other side. So it's a quite a big dilemma, right? So it's a very delicate balance, okay. But kind of over the last 2 weeks, these fears has sort of been reduced. So you could see that people are a bit more upbeat, okay, and they're hopeful that this bank crisis does not go into a contagion, right? So if things get worse, okay, if things that have not surfaced continue to bubble up, then this is something that could be a very, very big impact on the global economy, right? And in last week when IMF came out with their report on the outlook of the global economy, basically what they have painted is not very rosy at all, okay. It headlined the report as a rocky recovery for 2023, and also in 2024 it's going to be very, very weak, okay. So these are the numbers that what do you call that the IMF came out in terms of their world economic outlook April 2023. So you could see in terms of the global economy, okay, in 2022 there was 3.4% growth, but a steep drop this year, and 2023 2.8% only, right, before slightly rising to 3%, also not much improvement, okay. So they also see this 3% to going to work out over the next 5 years. And this is one of the lowest medium-term forecasts for many, many decades. There's not been such slow global growth in terms of the global economy. Okay, and if then they said if further financial sector stress, okay, what we talk about the banking, what do you call that? Industry, if there's more bank failures or more stress going in, it could even decline to 2.5% in terms of the growth in 2023, right? But overall, in terms of what they have in their forecast, is they see risk very heavily tilted to the downside. Okay, so they really don't see very good things, especially if you look at the advanced economies, right? They see such a huge drop. Okay, in 2022 was 2.7%, and there's this huge drop in 2023, 1.3%, and only rising very marginally in 2024 at 1.4%. Okay, so the growth, this growth is actually going to be carried by the emerging markets and the developing countries. Okay, so these are the ones that are going the ones that are going to shoulder heavily the recovery for the for the global economy, because the advanced economies are not looking good at all. Okay, so that's the outlook from the IMF. And in terms of the IMF look, three key themes are looking not so great here. Okay, basically they see the odds of a hard landing the rising sharply. So they see a very particular hard landing for the global economy. Okay, number one, because of persistent high inflation. Okay, so although it has tempered, okay, as you saw the numbers in the US, it's come off a bit. Okay, global headline inflation, okay, fell back to 8.7% in 2022 and looking at falling to 7% in 2023. But the core inflation, okay, is continued to be stickier, more difficult to handle. Okay, so the core inflation is still high, right? The second factor is hopefully there's no more financial sector turmoil, because that's going to be a very bad thing. If you have another banking system failure or volatility, okay, it can result in very, very sharp drops in terms of the global economy. Okay, and when you constantly have to persistently tighten the global financial conditions, it's going to be very tough for everyone. Okay, and the last but very important thing is whether the Ukraine conflict is going to work out to be something worse than what it is now. Okay, so they also see, IMF also see the risk of war intensifying and leading to more food and energy price spikes. Okay, again pushing up inflation. Already it's already very tough. Okay, but if you have the Ukraine conflict going and spreading, it's going to be real bad news. All right, so these are the three key themes that the IMF says are the key risks in terms of where the global economy is going to go. Right. So in terms of the wild cards, what are the wild cards? Okay, wild cards are like these two cards if played, and it's gonna be the key thing to dominate the oil markets. Okay, we already said for China, okay, the resurgent demand, okay, and the reopening. How fast is China going to recover? Okay, if you see the numbers coming for China keep getting better or constantly improving, then this will be a very, very big kicker in terms of the oil price. Okay, so in terms of the reopening, is inflation going to soar? Okay, as travel or domestic economy recovers. This is China's biggest contribution in terms of the oil price, the demand. Okay, the other thing, which is this the other wild card in terms of that region, and it involves China, is the Taiwan issue. Right, so a lot of saber rattling across all the players in terms of Taiwan. Okay, and this is a very worrying factor. Okay, very, very worrying factor. If a conflict arises in terms of Taiwan related to the China-Taiwan, what do you call that situation, this is going to be again, okay, something similar to the Ukraine conflict. And then, of course, there's going to be a kicker in the oil price again, right? But then we also see whether that will have a dampener on the supply chain. Right. So the other part is Russia, of course, the uncertainties on their oil supply, okay, to the global market. How are the sanctions going to work? The cap on the Russian crude oil, how's that going to work? And last but not least, again, emphasized by IMF, is there going to be an escalation of war in the Ukraine area what do you call that, spreading into the euro region? Is it going to be, okay, God forbid this word, World War III, right? I don't know why, but if you read enough in a lot of those in online news, you will see this word being bandied around, okay, the World War III, right? Spreading in the eurozone, and then of course bring in Taiwan as well. Okay, so we don't know, but these are the wild cards, and these are going to dominate oil markets in terms of the movements. Okay, so key themes, next catalyst, okay, a slowing economy, a rising inflationary situation, okay, somewhat like stagflation. We haven't seen high employment come in yet, okay, in terms of the US, employment still very strong, okay. If this comes in, then all three factors will be equivalent to this word called stagflation. And stagflation is basically bad news, because stagflation is something that doesn't go away overnight. It's going to stay for years, okay. And that was what was said by IMF and World Bank last year as well. The risk of stagflation is very high, okay. And of course, in yellow, the big caution is this word World War III just ahead, okay. So this is going to be very, very tough because of geopolitical risk, okay, and all the flashpoints in Europe and also in Taiwan. All right, so with all these key drivers which we are going to watch, okay, okay, some are exciting, some are not really good news, okay. We now move to look at charts, okay, more calming, hopefully. Okay, let's have a technical outlook of WTI crude oil futures prices. Okay, what are the charts saying? Okay, I promise I will take you to live charts after we move on. We're going to have a look at some static charts first, and then we'll look at the live charts. All right, first let's look at the weekly chart. Okay, in terms of weekly chart, basically we see from the Elliott wave analysis. Okay, for those of you who are new to Elliott wave, basically it's analysis of the various momentum phases. Okay, so in terms of the Elliott wave theory, in terms of a bull market, there's always a 5-wave formation. Okay, there'll be up wave 1, followed by correction number 2, followed by a very aggressive wave 3, okay, and then followed by a correction of wave 4, which we saw over here, the correction downwards, wave 4, okay, and then after wave 4, you have the wave 5, and wave 5, the characteristic of wave 5 is wave 5 will usually, okay, most of the time exceed wave 3, okay. And remember, wave 3 was the 130, the price levels we saw last year, which hit last year, okay. That was the high, right? And if what this is reading is basically saying that in terms of weekly chart, okay, over the next couple of 6 months or 9 months, or 20 weeks down the road, you may see another challenge of this high. Okay, so that's what it's saying. Okay, so it's completed wave 4. Actually, the prices have come down to the this box here. This box is the 50 to 61.8 retracement of the wave 3. Okay, so it's already dropped into now. And we see some bullish divergence. Okay, so this could be possibly be where if oil prices are going to recover, this will be the area that it's going to recover. Okay, and this chart, when I drew this, it hasn't broken 83 yet. Okay, so that big move upwards is not reflected in this chart yet. Okay, but we saw this, we noticed just now, right? The 65 region, 64 region, these are the supports. Okay, and this basically, this bullish divergence is signaling that this trend on the wave 4 is very possibly has been completed. Okay, we'll have to see. Of course, again, this prediction of what this wave sequence means, that that's a possible wave 5, which is going to take oil prices above the 130. Okay, right. This is what Elliott wave analysis says. Okay, what about the daily chart? Okay, a shorter term. Okay, in terms of the daily chart as well, it basically says that the 5-wave down sequence, okay, the bearish sequence on the daily chart has already reached its a 5-wave sequence completed. We also see bullish divergence here, which is basically a confirmation of wave 5, and also a possible because of the catalyst, the fundamental analyst catalyst that pushed prices up to the 83 level. Okay, this was done last week, so yes, it's not reflecting the 83 assault right over here. Okay, so this may have played out. So basically, we see a possibility of now a new fresh wave. Okay, now the thing about fresh waves in terms of the Elliott wave, okay, let's say for example, if this begins to have a wave one, if this is a wave one of the new wave, the characteristic of wave one is nobody believes that still this is a uptrend. Okay, so anything that goes up, you see a lot of sellers coming in, which is a characteristic of what has happened. Okay, after the OPEC has announced it had this jump, okay, after that it stayed sideways. Okay, every time it goes up, there were sellers coming in. CPI come in, okay, prices took another 2% jump, and then sellers come in again, now back to 79. Okay, this is a very characteristic character of wave one. Nobody believes it. Okay, so all the traders are still trading a range trading. Okay, so basically in terms of wave one, there's also a possibility that it may even come back down to the 60s level, no? Because wave one can what do you call that, come down on wave two. The wave two correction can come down even to the 60s, and even right to the to retest the 65. Okay, but the next move up is something that you want to watch out for, because the next move will be the wave three on the daily chart. Okay, so this particular wave, you will see a lot of selling in terms of the supply after it goes up to important price points. Okay, 83 being one of them. Right over here, right, you can see it's actually the wave 4 high. Okay, there will be sellers coming in again, and then probably bring it down to this support. So you will try to range trade. Okay, but the important thing is the next phase after this wave one, sorry, the wave two correction will be wave three, and wave three is the most aggressive wave, and that is the wave that you want to be in when you're trading. All right, so that's the read in terms of the wave sequence. Later we'll go into the live charts and see the updated live charts for daily as well as for the hourly. Okay, so basically, what is the trend, what's the read of the trend going forward. Okay, so in terms of going forward in the next couple of weeks, you will see quite a rangy trade. Okay, with a slight upward bias. Okay, because it's trying to go up for the new impulse wave upwards. Okay, so every time it goes up, okay, it has a potential to go up, but you will see selling coming in as it reaches the important price points. Okay, but once it's convincingly clears all these resistances, okay, convincingly stays above, then you are basically seeing that the third wave is on its move already. All right, so how to take advantage of all these nice moves? Okay, so let's go and talk about the CME crude oil products. Okay, okay, the first is, of course, this is a very famous contract. Okay, WTI crude oil futures CL. Okay, this is where, in terms of the US oil, everybody goes there and trades. Okay, and hedges. Of course, those in the commercial players in oil, they will go in and what do you call that? A hedge with this contract. Okay, and this is a big size contract. This contract is 1,000 barrels. Okay, and last time when I was trading this was the only available contract which had a lot of liquidity. Right, I was trading this 1,000 barrels crude oil. A very big movement on a daily basis. Okay, your P&Ls can go up quite a lot because it's number one is volatile. Okay, number two is a very big contract. Okay, and this is of course the global benchmark for US oil. Okay, so all the traders on US oil, WTI, they go in and hedge against the prices, lock in prices of, or if you're a user of what do you call that, crude oil, you buy your hedge contracts. Okay, and if you're a producer, you will sell your hedge contracts. Okay, and this contract is 24 hours. This is the number one liquidity in terms of the number of contracts traded in the world. This is one of the most liquid contracts in terms of crude oil. Okay, so basically in year to date 2023, it trades about 800 over 1,000 contracts per day. Right, very liquid. Okay, and the minimum tick for this crude oil is 1 cent. Okay, so 1 cent is equivalent to 10 cents because you have to multiply by 1,000 barrels. Right, so this contract, every 1 cent move is worth $10. So you can see that it's a very big move when it comes. Okay, and this contract, of course, because the commercials are in, it's a deliverable contract. That means there is actually physical delivery. Okay, but of course, when we are traders, we are not commercials in the business. We don't take delivery of this contract. Okay, big contract, right? So we have a solution, and the solution for traders, okay, is CME introduced this wonderful contract called the WTI. In short, it's called the MCL, okay, which is only 1/10 the size of the benchmark WTI contract, okay. And this has created a tremendous opportunity for smaller traders, okay, or traders who want to have more flexibility in terms of their position sizing, okay. So let's have a look at the micro WTI specs, okay. So this is a smaller spec contract, okay, only 1/10 the size, 100 barrels instead of 1,000, okay. And because it's a smaller size contract, okay, the one tick move is only $1. Okay, so of course, for the smaller players, is more advantageous in terms of also less costly for them to trade in terms of per contract basis. It's only 1/10 in terms of the margins to trade this. This is a cash settled contract, so there's no physical delivery for it. Okay, more affordable, more flexible in terms of position sizing, and it expands the opportunity to participate in the global oil markets for the smaller traders. Okay, so even traders for like us, okay, we want to have more flexibility. Of course, the big crude oil, if you are swinging the big sizes, is a fantastic contract. Okay, but the smaller traders, okay, we want to have more flexibility in terms of position sizing. We want to scale out on buying or on our profit taking and all that. The micro WTI is an excellent contract. Okay, and it's a pretty even on a daily basis, it's got a very good liquidity. It's trading like currently it's about 92,000 contracts per day year to date in 2023. Okay, so for the smaller players or for the retail players, this is a fantastic contract to participate in the movement of the oil prices. All right, so let's move on and see an example of how do we trade this contract. Okay, but firstly, a comparison of the various WTI crude oil contracts available on CME. Okay, of course you have the micro, which is 100 barrels, and actually before the micro came out, there was a E-mini WTI, which was half the size of the benchmark WTI, 500 barrels. Okay, half the size. Okay, so for me, I tried that particular one, but I still feel the micro is my favorite because it's easier in terms of looking at the numbers. Okay, this one you have to have a quarter cent kind of minimum tick, so sometimes the calculation can be a bit confusing, right? QM and MCL, if you compare, right, intuitively your 1 cent move, $1 is easier. It's easier, okay, and a $1 move on oil is $100 US dollars move in your account. So it's easier in that sense, more intuitive compared to the E-mini. Right. So these are the three contracts available for crude oil. Okay, so let's have a for those who are a bit new to futures, how we calculate the P&Ls. Okay, so let's say, for example, if we are bullish on the micro or on oil in particular, so you want to go into the MCL to trade the oil markets. Okay, so suppose you buy one June micro MCL at say $70. Okay, now no more $70, right? So a couple of weeks back you could still buy it at $70, right? So let's say, for example, you bought $70 MCL, okay, and it goes up to 72, right? So you have a $2 profit per barrel. Okay, so because the MCL is a 100 barrels contract, okay, so you multiply your gains in terms of your $2 multiplied by the size of the contract, okay, which is 100 barrels. So a $2 move per barrel, 100 barrels, of course, is $200 gain. Okay, so it's actually quite simple in terms of the calculation. Okay, but you bought June the MCL, and if the markets didn't work for you, the markets actually fell. Okay, some sellers came to sell. All right, so if the market goes down to 68, then you have a $2 loss per barrel. Okay, so if you have one MCL contract equivalent to 100 barrels, then you would have a $2 multiplied by 100 barrels loss, which is a $200 loss. Right, so it's pretty simple. Okay, and for those of you who are not familiar with selling the markets, of course, those of you actually come for WTI, normally you are quite experienced. But anyway, for those who are new, okay, you can of course short the markets. Okay, you can make money from shorting the futures market. Okay, and you can make money from a falling market. So if you are bearish, okay, you see an important price point on the chart and you say, okay, at this point I think sellers are going to come in again, so you want to short the MCL. So perhaps an example is you short it at 70, right, and the market drops to 68, then you have a $2 or a $200 in terms of per contract basis. And of course, if it goes up, then you lose money. If you short the market and market goes up, then you will lose money. So if you short it at 70, oh, excuse me for that, okay, shorted at 70, right, and it goes up to 72, then you have a $2 loss. Okay, multiply by 100, the particular each contract, you have a $200 loss. Okay, so in terms of calculating the P&Ls for MCL, or even if you are trading the big contract, the CL, it's kind of simple in terms of this measure how much move per barrel multiplied by the number of barrels and multiplied by the number of contracts that you have. All right. So remember, we will be taking questions after this session. Okay, so if you lock in your questions in the chat box, okay, we will take the questions that you have for trading crude oil later. Okay, now I want to okay, before we get into the real charts, real-time charts, just a quick one. If you have a camera, if you can scan this QR code, it will take you to this newsletter. Okay, this newsletter sponsored by CME is written, it's called the Fresh from the Trading Room. Okay, it's produced by Inspirante Trading Solutions, and every 2 weeks we have this what do you call that newsletter, and on it it's got a lot of trading ideas. And this new issue, April 12th issue, okay, we'll talk about the oil production card and bank turbulence, okay, the failure of banks, okay, and talk about how it complicates the inflation battle. Right, so if you can take a shot of this QR code or type in Fresh from the Trading Room in the CME Group website, will get you into this newsletter. Sign up for it. Every 2 weeks, you're going to get some great ideas on how to trade the futures markets, not only the oil markets, but also all the other markets that are available on on CME. All right, so go there and get some trading ideas. Okay, now I'm going to switch my screen to share view my my browser. Just hold on a second. Okay, you see some emails. Okay, I hope you see my charts now. Okay, what I'm displaying in front of you now is the daily chart. Okay, let's see. Okay, am I connected? I seem to have lost the sound here. Okay, just hold on while.
Don't worry.
The sound is good?
Yeah, sounds good.
Okay.
And can see your chat. Yep.
Okay, fine. Let me talk through it. Okay, so you are seeing a daily chart over here, and basically what you see is over here, you saw the jump. Okay, this is the jump in the beginning of the month. Okay, and what basically is happening is this, as we said just now, this is the first wave. Okay, and the first wave, you tend to see a lot of sellers coming in, and all the as you can see over here, the 82 levels, 82.50, this level has been tested so many times, right? Over the last since actually December of last year. Okay, this price point 82, 82 and 83 levels, 82 half and 83 levels, multiple times. It touched here, it touched here. Okay, and the last this time, because this is where a lot of players will see is the resistance line. So coming in here, they will actually go in and sell. Okay, so this is typical of a wave one type of movement. Okay, it's probably the selling will you know, it cannot hold the 83 levels. We will come down to perhaps even at these support levels. Okay, the next support levels is of course the 72 level. So it's probable that in this particular range will start to form itself. Okay, and this will be probably be considered the wave two type of formation. Right, so let's go in and look at the real-time chart now for the hourly chart. Okay, so you could actually also see that the selling continuing on. Okay, and if you look at the momentum, right, the current momentum down to 79, the low today intraday is 79 even, right? The momentum is still going down. Okay, this momentum is lower than here, so possibility of this continuing, okay, for a while, right? Probably as you can see just now, right to the 72 levels. Okay, where are the 72 levels? Okay, this of course is the very big support levels. Okay, this gap of course will also be the support. Okay, but if it basically breaks through the bottom of these two bars here, which is the 79, if it breaks 79, then you could see a quick drop to this to fill the gap, okay, at 75. Right, so this is currently what we are seeing. Okay, so if you are trading intraday, okay, let's move on to intraday. Well, let's look at the 30 minutes or even the 15 minutes. Okay, 15 minutes. Okay, we're seeing this momentum still at its peak. Okay, this is still the lowest momentum in terms of the aggressiveness, so possibility of still continued pressure over perhaps the next half day is there, right? So hourly is basically saying that over the next 1 or 2 trading days, you can still see some downside risk. Okay, so 79 is very important. Okay, this 79, it needs to hold. Okay, if it doesn't hold, then it will we will come to fill this gap. Okay, of course, also depends on what other news are hitting the market over the next couple of days, right? So these are the chart readings. Okay, what I want to do is we can now go in and take some questions. If you have some questions, I'll pass it back to Brian. And Brian, do you have any questions from the audience? Okay, Brian, are you there?
Yeah. There's some few questions from here,
Okay.
but yeah, sure. So yeah, any audience here, you do feel free to ask if you have any question. So we'll go through some questions here first. So the first question asking from Mr. Law. So what are some of the technical indicators that analysts are looking at to determine whether crude oil will bounce back or continue to decline?
Okay, excellent questions. Okay, so of course, in terms of the technical indicators, there are lots. There are lots of indicators that traders use. Okay, but the most commonly used, what they call that, currently a popular thing is price action and the structure of the basically the price. Okay, so let's say if I move on to the daily charts. Okay, let's have a daily chart. Okay, and then just basically look at the wave structure. Okay, how the waves are moving. Okay, to give you an easier idea, I will just put it into a line chart. Okay, so put it into a line chart. Okay, and this is very easy for you to visualize, right? So in terms of from March, okay, where prices started to drop and then tried to do a recovery over in June, okay, you could obviously see that the whole trend here is the trend of the higher highs and the higher lows, which is a very, very definitive, what do you call that, description of a down wave. Okay, so this is a down wave. Now this particular wave now, okay, the prices, you see the closing prices in terms of the daily chart is above all this, right? So in fact, sometimes this line chart gives you a less noisy look. Okay, as markets continue to close higher, it's what you call that, it's a bullish sign. Okay, so if you look at the last phase from mid-March onwards, you could see that the prices are continuously and successively closing higher, right? High, it's going higher, then come down, then it's moving up higher, and then it's moving up higher. Okay, but for this particular shorter term look over the last couple of days, you could see this step down successively closer, lower closing. Okay, so in terms of the short term now, okay, it's basically looking to be going down. Okay, let's see what's happening here. I have some reactions. Are you still seeing my chart?
No, I
Hmm.
think it's not responding.
Yeah, there is some connection over here. Let me see. It's trying to um okay.
Yep,
Hope
it's
you
connected back.
seeing it.
Yep, yep, yep.
Okay. Some technical issue. Apologize for that. So for the okay, right. It's probably my connection or something. Okay. Okay. The last couple of days, you can see actually consolidating downwards. Okay. So what are the indicators that I use? Basically, I use the structure. Okay. Elliott wave is one good way to look at the various phases of the markets. Okay. I'll talk through it while our visuals are hopefully it's improving. Okay. I think it's the line. And what I use, what I personally use is okay. Let me show you what I use. Okay. Okay, but I need to get this chart working, which is not doing very well. Sorry. Okay. Okay. I hope it's stabilized now. Okay. If you can't see my charts, okay, I'm just going to tell you that I use the Bill Williams alligator. What do you call that indicator? Okay. Let me see whether I can do it. The line is just kind of not so great. Mm. Okay. I use the alligator. Okay, if you this is a trading view, this is the screen that I use, right? But the alligator is quite a popular indicator available in all the platforms. Okay, so what I use is I will use the alligator and display it on the chart, and the alligator is basically a triple moving average display, and when prices are trading above the alligator, it's an indication that it's very bullish. Okay, and if it's trading below the alligator, then it is a what they call that is a bearish sign. Okay, so here I've displayed it. Okay, and if you can see after the jump from the OPEC announcement, markets have stayed above the alligator, the triple moving average. Okay, and it's a it's a bullish move. Now, now it's coming back to the what do you call that to the triple moving average. So when it's inside the triple moving average, then basically prices are going to start consolidating, right? And if you see right over here, this market when it's going sideways, the prices was crisscrossing the alligator, which is a sign that market is on a consolidation. Okay, so as markets continue to move higher from the three lines, then you basically this particular indicator or this particular moving average basically will show you the bullishness of the move. Okay. Mm. I just have to apologize a bit on the technical glitches here.
Yeah, no worries, Mr. David. Yeah, I think
All
we
right.
can go up to our second questions. So
Okay.
the
Thank you,
second
Miss Flo, for
question
that.
is from Charles. Okay, would like to know normally what Malaysian time do we place the futures trade, especially in US counter?
Okay. Of course, the most active time for trading crude oil. Okay. So last time when I was in a full-time job, okay, in an investment bank, what I normally do is I'll look at the what do you call that the charts somewhere say towards the later afternoon, okay, and I'll do my because a lot of you probably are also employed full time. Okay, so you have a daytime job, and then of course at night you that's where your spare time is. And trading crude oil is actually perfect for that because you can do it at night after your work. Okay, and that was what I did as well previously. So I what do you call that? I traded crude oil at night. So the good time is a lot of movements will start to come in during the European markets when the European markets are starting open, okay, and then moving towards the US hours. Okay, of course, the US hours are the most very active. Then you have both the convergence of the Europe traders as well as the US traders, and as well as all the Asian markets Asian traders who trade the night markets as well. Well, that's not to say that the Asian hours are not active. The Asian hours are also very actively participated, okay, because you also have that time where the China traders are there as well, okay. So even though the most active and the most volatile time is during the active hours in the UK US time zone, okay, you still get some opportunities as well during the daytime, okay. But of course, if you are a retail trader working on a daytime job, the WTI, the crude oil markets or the US markets are a perfect choice for you to trade after your dinner, or most of the movements will happen after your dinner. Okay, so I hope that answers the question. Brian, back to you.
Yep. So there's some more questions. So it's Mr. Koo. What's your view on USD given China's continuously selling on US debt? How would
Mm.
it influence crude oil trend?
Okay. All right. So that's a very, of course, very good question. Okay. So if you have the dollar on the weaker side, okay, you probably see the oil prices go up as well, if reflective of that. Okay. I don't have a chart here. I wish I could show you a chart on the US dollar. Okay, currently the US dollar is still on a decline. Okay, there's still some room for the dollar to move down. Okay, but the longer term look at the Elliott wave of the DXY, the dollar index, it looks like the dollar could continue to climb on a new wave. Okay, but as it is over the next couple of weeks, you could see dollar still continue to trend down. Okay, but in the longer term, you may see dollar rise. Okay. In terms of what the Elliott wave chart is saying. Okay, so in terms of the dollar relationship, of course, dollar relationship with oil and all the commodities are, when the dollar is weaker, then those commodities which are priced in US dollars will tend to be more attractive because they are considered cheaper against the other currencies, right? So there is a inverse relationship between the dollar and the commodity prices. Okay, so I hope that answers the question. Okay, for the outlook for the next say couple of weeks or 1 or 2 months, we could still see dollar on a decline, right? And with that, of course, it's supportive for crude oil in terms of its prices. Back to you, Brian.
Okay, here's another question from Ms. Lim.
Mm.
So since EV is expanding very fast right now, most of the brand vehicle company have invent their own version of EV lah. So
Mm.
what do you think about the advancement of this will affect the crude oil markets?
Okay, of course, that is the undercurrent movement. Okay, the view of a lot of experts is this, of course, the RE and this electrical cars and all that will be definitely be the trend. Okay, but crude oil demand is not only in vehicle usage. Okay, the crude oil is such a large application in terms of worldwide global usage. Okay, so it's not so easy to shake off crude oil. Okay, of course, in terms of renewable energy, the trend is going towards that. It won't be that fast in terms of what the energy experts are saying. Okay, you could see that even in terms of renewable energy, it's not an easy what do you call that? It's not easy to replace crude oil because crude oil is I mean, we've been living with crude oil and it's such a easy and cheap way of fueling economy or running production and all that, right? So in terms of that, a trend will come. Okay, the experts will say that probably the effects won't be so fast. Okay, and the prices of crude oil, although that's a very long undercurrent, under baseline kind of undercurrent trend. Okay, in terms of crude oil, because so many industries still so dependent of crude oil, anything that any factors that impact supply and demand of crude oil, okay, putting aside renewable energy and the replaceable energy, whatever, it's still it's going to be the dominant what do you call that, source of fuel over the next couple of years. Okay, so it's still there, it's not going to go away. Crude oil will still be first. Okay, whilst we find ways of having cleaner fuel. Okay, I hope that answers the question.
Okay, thank you, Mr. David. So here's the last question.
Mm.
So what are some strategy that investor can use to potentially profit from the movement of crude oil markets?
Okay, so just now we saw the daily movement, right? So the daily chart is basically implying that okay, it's going to go into a consolidation after that move up. Okay, what we want to see is if crude oil starts to move back to corrective around the 60 over levels. Okay, that will be probably a zone you want to look at if you want to trade the wave 3. So the strategy is to position yourself for wave 3. Okay, wave 2 will be this down wave over the next say over the next 4 weeks. Okay, you could see oil prices coming off. Okay, let's see whether it breaks 79. Okay, which is a very crucial base. It breaks 79, then it's going to fill the gap. Okay, fill the gap up to the 75, 76 level. Okay, then what is the reaction there? Okay, so is it going to stabilize there? If it retraces half that move, okay, there'll be the region to look to see whether say whatever indicators that you're using. Okay, look for a indication in your technicals. If you're using technicals or around that region, look to buy. Okay, if not, for the next 4 weeks, you may want to trade shorter term waves. Okay, because the longer term wave has not come, it needs to build up that wave 2 bottom. Okay, so once you see a buy signal coming from that zone, okay, then you would like to position yourself. So the next wave, which is the wave 3 after that, this is the wave that all the traders must get in. Okay, this is where the strongest trend for crude oil will in the next wave up. Okay, the wave 3 is going to be that wave that you want to ride. Okay, so in terms of the strategy going forward, the next couple of weeks, okay, looks for shorter term trading opportunities. Okay, whilst it's coming down, and then look for a buy zone. Okay, look at your technicals to see you have a buy zone. Then at that time you can position maybe for the bigger wave upwards. Okay, so I hope that helps in answering that question. Right, back to you.
Oh, okay, thank you, Mr. David. I guess here's all the questions from the attendees here. Would you mind to pass me back the presenters? So
This is going
can
to be a challenge because I can't see my own screen. So I don't know whether I can pass to you. I apologize if I can't. Yeah, I can't even see my own screen. Yeah, it's kind of funny. But you can't see my screen. Okay, let me see. I can do something.
Oh,
Do you see anything?
I do see on your trading view there. Never mind. I think I can set from here. Moment.
Okay, wait a second. I think I have a connection issue here. Oh my God, you're gonna have a blank screen for the whole day.
Yeah, no worries, no worries. Yeah, I guess I'm back to my screen already.
Oh, you're good. All right.
Yep, just back to my screen already.
Perfect.
Okay, since everyone don't have any questions anymore, so I believe if let's say you guys have any question, do feel free to type in the question box. Yeah. So before we end, let me to talk about our promotion again. Yes, coming we have three promotion campaign. The first one will be trade and earn with Philips. So this campaign basically, which means the more you trade, the more rebate you will get lah. So not just only the touch and go e-wallets, reload pins, we also will provide some grant gifts to all our traders lah. So includes Apple Watch, AirPods, and also an iPad. Okay, so the next campaign will be discover Singapore stocks with Play Capital. So while you are keen to trading about the Singapore stocks, feel free to approach with us because we are start offering the Singapore stocks to all these clients. So from this campaign, you can get a touch and go voucher and also stand a chance to win the iPad Pro. Lastly is our CFD campaign, trade US index CFD at 2 USD. So this is also a year-long campaign. So with just as low as 2 USD commission rate, you can start trading your index CFDs lah. Okay, since yep. Okay, then yep, since there's no more questions, I believe we're going to end the session. Okay, if let's say do you guys have any question, do feel free to contact with us lah. We do have a Facebook page, YouTube page as well, and also Telegram and LinkedIn. Not only that, we do have Instagram. You can just search Philip Capital Senjaran Berhad, and do feel free to go to our corporate website, which is philip.com.my, to get to know about all the information and also the webinars details. So here is some of our contact details. So if let's say you are staying near East Malaysia, you still can approach us by calling the Kuching branch or Cebu branch, or else or from Sabah, you can call the Kota Kinabalu branch. Not only that, we feel free to help you all around the world lah. Yep, so that's all for today. Hope you all enjoying the session today. And of course, since there's a special holiday in this Friday due to the Hari Raya, so by here, Philip Capital will wish you in advance that happy Hari Raya. Thank you. Bye bye.
Bye bye. Selamat Hari Raya, everyone.
Selamat Hari Raya. Yeah, the tour is free. Go back your kampung.